Well, I had the pleasure of interviewing one of the core founding members of CrowdProperty as we talk about raising finance for your property development. Let's talk about CrowdProperty because it's great to have the background that you've been in property, you've had a long journey like I have, but you've now got involved with CrowdProperty. Give us a bit of background to what CrowdProperty is as a starter for 10 and a bit of history of where it's come from and why did it get first established.
Sure. So the why is very important. Look, if I go back a bit further, so I started investing in property in 2002. That was alongside a far too full-time career in management consultancy, and I was seeing a load of different businesses, a load of different sectors, and also the role that tech was playing in the world's largest asset class, which is real estate. And I started looking, very shortly after Mastermind, into what technology can do in property. And there were sort of two strands of that. One was angel investing, venture capital investing in property technology startups. And I'm invested in about 20 of them, and I sit on the investment committee of a venture capital fund that focuses on that, actually Europe's most active venture capital fund. And that's because I've sort of been in that sector and around in that sector since prop and tech were really put together. And the other observation was that three of us started talking, and with a couple of others as well, and the other two being Simon and our other co-founder in CrowdProperty, a chap called Andrew Hall. We started talking about what, quite frankly, how much of a pain in the arse it is to raise finance for property projects. Okay, and in particular, property projects that were being done by the core of the entrepreneurial element of property, the small and medium-sized property professionals. Okay, and we all, it's proven in history that in 2008, 2009, lending by banks to small and medium-sized enterprises just dropped off a cliff, and businesses like Funding Circle were founded then. And I used to work with the co-founder of Funding Circle. I remember talking about the conception of that. But that was addressing a pain, and that pain was that banks stopped lending to SME businesses. Okay, and that's a real problem for the economy. So just like Funding Circle found that SMEs was couldn't lend and couldn't borrow anymore from major banks, it was a real pain in the property sector. And property, it cannot be perfectly algorithm. So what you need is, and what we started to build was a lender that was very efficient, enabled by technology, but still had the expertise at its heart. Okay, so and we talk about that as technology for efficiency, expertise for effectiveness. Okay, and we felt that the whole market was letting down small and medium-sized property professionals, and that bears out in the data, and the data is quite staggering on this. So everyone knows that we as a country need to build about 300,000 homes a year. And we haven't got near that for decades. So in 2008, about 200,000 homes were built, and about 30% of that delivery was by small builders, people building small projects and under 100 units a year. In 2017, that contribution by small builders was 10%. 10% of the still 200,000, which is too few, but only 20,000. And one might look at that and say, oh, this is a dead market. Or you look at it and say, there's a massive barrier to solve here. And we saw that and felt it ourselves. And there's no better genesis of a business where you feel and understand that pain and know how to solve it. So that's what we set out to do. And we started lending in 2014. That was 2014 was an interesting beginning. Every business has got to start somewhere. We listed our first project on a rudimentary crowdproperty.com website, and that project took 10 weeks to fill. Now, that's not very helpful to anyone, especially, as you know, Simon, speed and certainty are very important in property. So we saw that there was something in this. We saw that there was demand on the borrower side for people to borrow from a better lender. And we saw that there was real demand as well from investors to say, actually, base rates are low. Or is there something else I can add into my diversified portfolio of investments? And then what we work very, very hard to do is match the supply and the demands of that capital as efficiently as possible. And that enables us to give a better deal to borrowers and a better deal to investors.
I mean,
so that's the genesis.
I mean, just coming on to that, Mike, my own personal experiences, and I had a project where I was converting a single let property, extending it out and converting it into 5 flats at the time. And I recall trying to get finance for this particular property, and this is before the CrowdProperty was even thought about, to be fair. And I had a couple of lenders, Paragon, Aldermore, those kind of organizations. And I remember the pain of their application forms, the various meetings that I had to have. And this went on for months. And I just thought, well, hold on a minute. I've got this property that I've now got. I'm looking to get finance on it. But it must have took about 3 months to get this money through. I mean, but I saw on LinkedIn, and we talked about marketing. I mean, LinkedIn is a great platform for CrowdProperty. But I saw that the money was filled within 20 seconds. I mean, that's hugely, significantly different.
So yeah, as you say, it's like, you know, I mentioned that it took 10 weeks to fund the first project, which isn't speed and certainty. But now we provide speed and certainty to borrowers. And during COVID-19, during lockdown times, the last 14 projects that we funded have been funded in under 41 seconds on the CrowdProperty platform. And yesterday it was £400,000 in 20 seconds. And you know that doesn't happen overnight. There's no build it and they will come here. That is 6 years of trusted brand building, of 100% capital and interest payback track record, of security that is first charge, so that if there are tough times, you are the first to recover your capital as an investor through CrowdProperty, and also you are reassured by the fact that CrowdProperty controlled the recovery process, which is actually an undervalued or underestimated importance of when you're investing in something, be in that priority return, be on that first charge security. And there's no more, better illustration of that than right now. If there's an economic shock that could come from the financial system or could come from elsewhere, okay, make sure you're first in line and make sure the people you're working with can control that outcome and they know what they're doing. That's the crucial thing.
I mean, from a property developer perspective, Mike, if I had a deal, clearly it's not going to be list it, boom, 20 seconds, I've got my money. What's the due process of going, you don't know me as a property developer, as an example, meeting CrowdProperty for the first time, getting a property listed, and then getting it financed. Talk us through that process and typically how long that might take.
Yeah, sure. And this is really important because the 20 seconds certainly isn't the time to get the money, as you suggest. So what we thought a hell of a lot about this, and we wanted, our mantra here was that if the developer spends less time faffing around raising their funding, and answering all the questions and the months and months of paperwork and iteration and investment committee meetings and things like that, okay, if they can spend less time doing that, they can spend more time finding sites and delivering sites. So they build their property business quicker. So that's point number one. So the whole process net takes a hell of a lot less time, okay, for a developer. Number two was then also, if you analyze the typical small property professional business, it's 1 to 3 directors. It's a very lightly resourced business because a lot of the activity is outsourced and project-based, etc. So it's service providers and contractors and, etc. right throughout the process. Okay. So therefore, so there's scarce time there, but therefore also what you want is a second opinion. So what we felt we wanted was to be able to work with a lender that could say, yeah, that's a great project. No, that's not a great project. Okay. And both of those answers are productive. Okay. But so what we did is I filled in so many 20-page buy-to-let mortgage applications. Okay. Our system can underwrite a buy-to-let mortgage application with a postcode and a door number, right? But development is more complex. So we applied the principle, which is the Winston Churchill quote that I love. Sorry for writing you a long letter. I didn't have time to write you a short one. Okay. So literally the whole team worked on this, the whole team, and every different lens and perspective. Okay. We wrote down everything that we could know about a development to assess it, to due diligence it. And we said, well, do you know what? We need to know these few things at first to be able to give a view on a development. So our application form online, and you go direct to us, an online application form, and it's 12 boxes. Okay, and from that, and it'll take anyone less than 5 minutes to fill out. Right. And from that, you'll probably get one of 2 answers. Okay. Now, it might be a no, okay, but it'll be a no with reason, because when you fill in that form, that pings all of our tech, data, analytics, etc., across everything that can be analyzed automatically. And that pops up in front of one of our property analysts within seconds. Okay, all of that data. And we're able to, within 24 hours, and often much quicker than that, within an hour or 2, we'll get in touch firstly, because we're property people and we want to understand the property side of things, about the vision of the project, because it's not just about the numbers or the address. And we'll talk it through, and we'll talk through our conclusions from our analytics and our thoughts from our expert perspective. Okay, and it might result in saying, look, I'm sorry, we don't think it's a great project because of this, this, and this. That property person might have thought of 1 or 2 of those, but we can add more colour to that based on our expertise. And what that enables the property person to do is then say, great, thank you. I get it. I see that. I missed it. Great, thank you. It didn't burn much of my time, but I can now park that. I found one. I can find another, etc., etc.
Yeah. And just on that point, though, that itself is building that trust and credibility, because you're giving them more of an insight about their own project.
Yeah, exactly. Because again, these are property projects. If you're going to take on a property project and spend 12 to 18 months of your life doing it, make sure it's a good one. Okay, yeah. I'll help you find a good one. Because it's different to, worst case scenario, you buy a flat and it doesn't cash flow positively. Okay, you haven't spent 12 to 18 months working on. So then there's the answer of yes, which is what everyone wants to hear. This is a great project. Tell us a bit more. There will be a few more questions, definitely, but it enables us from that form to ask the right and relevant questions for us to diagnose in more detail. And that gives that property professional the opportunity to say, great, I'm going to park everything else I'm working on and I'm going to close this project. Right? And the powerful thing there is that we have assessed in that way over £3 billion worth of projects. So our data is amazing, and we can place on a relative scale every single application that comes in. Okay, so that gives enormous insight for us to make good lending decisions. Okay, but enormous confidence to someone that says that's a yes, go for it. Okay, and they'll know that, and our terms and everything laid out for them, how much we'll lend, etc., within 24 hours. And they can then go off and deliver speed and certainty to the vendor, which is what the vendor will value, and they can strike a better deal. We have worked with people before they've had a price agreed on a site, and we like doing that. We'll assess it for them, okay? We'll then give them a proof of funds note, proof of backing, and if that's competitive, if there are 5 parties vying for that site, we have people, have had people saving tens of thousands of pounds off the highest offer because they've got everything together. And that vendor turns around and says, you're the most certain candidate here. I want to work with you.
Yeah. Back to certainty, isn't it? You know, ultimately, it's not always about who gives you the best price. It's the certainty of delivery.
Yeah. And the net result there is it's a better project because it's a better price, it's better for the developer, and it's better security for us. So, you know, and that's one of the sort of the key principles, that there's that element through the application process and securing the deal right through the project, okay? Because we want that development to be a success. They want that development to be a success. Let's work on it productively together. You know, none of this arm's length evil, evil bank that, you know, nobody ever phoned, well, I don't know who to pick on now, but you mentioned Aldermore earlier. Nobody ever phoned Aldermore, and said, I've got a problem on site, what do you think? You know, the only thing, if you actually manage to speak to a human, and even smaller likelihood, a human that knew anything about property, okay, all you would hear in the background is them rustling for the contract and the first charge security paper, not an answer like, yeah, don't worry about that. We've seen this loads of times, just do this. Or, yes, that's a challenge. We'll be on site tomorrow. Let's crack it together.
I mean, from an average time frame, Mike, and I'm talking about average, maybe last 3 or 4 projects that have been listed from developers, how long has it taken for someone to go through your process to say, can you evaluate this property project? For you to go through your due diligence checks to make sure it's the right project for that person, never mind just for CrowdProperty, and then to get money through the door for the property developer to take action. Typically, how many days, weeks are we talking about here nowadays?
So we're never the critical path. It's usually legals. It usually is, as you know. But the quickest we've done is someone phoned us the day after they'd been at auction, and they had won something at auction. So they'd secured a property, they put down their 10%, and as you know, when the gavel goes down, that's an exchange of contracts, 10% down, and you have to complete in 28 days. The money was in their accounts 6 days later. Okay.
Wow.
Us having gone through absolutely everything through the process. And that's really important as well, because that's another element of just why property understanding is important. Because we could have said, don't worry, you've got 27 days, we'll do it there or thereabouts or whatever. Okay. Nobody needs more stress in their lives, firstly. And secondly, you know, there's always questions and bits to come up and in the legals or whatever that struggle timelines. Okay, so we said, well, we're going to nail this in 10 days, and we nailed it in 6 days. Why target 10 days? Because then we had 17 days contingency. And that puts everyone at ease. And, you know, it's things like that, that having felt these pains ourselves, having done constant research on what is every single element that we improve, can we do that so quickly? And I mentioned slightly flippantly, but arguably truthfully about the legals taking quite a long time. So we totally redesigned the legal process flow for our at our legal advisors. So we've got we've got a panel of legal advisors, and we redesigned their process so that critical path of actually then the borrower getting the money was slicker and better. And there are loads of elements to that. And that was, I really enjoyed that piece of work, because it was sort of back to good consulting days of just making something better and better and better, actually in someone else's business. So I was sort of prying a bit. But but it was, really productive. So that is the customer viewpoint. It's not just about our service, it's about the customer experience, including from providers that we work with.
Yeah. I mean, talking about developers needing money, what about the flip side, whereby people have got money, they look at COVID-19 and, will property prices go down? I've got some money, don't want to invest it into a property right now because of uncertainty. If someone came to you with a bit of money, what's the process? How long does that take to go through and have that money invested?
So we have, I'll start with, we have over 10,000 investors on our platform. Amongst those 10,000 are my mother and my mother-in-law. I'm scared of both of them. So I work very hard at doing a very good job. But also in that mix are funds and institutions. We have such diverse ranges of capital, and that enables us to fund, for example, through COVID-19 periods, because we've got such diverse capital base. And we're standing out in the market as one of the only lenders in the market at the moment. So secondly, why do they come to us? Taxation is, I'm talking to the expert, taxation has changed dramatically in property ownership. And one of the challenges is that, that's lumpy assets. So you're quite concentrated on your risk. Whereas with CrowdProperty, you can spread investment, and we actively encourage it. Diversification is a good strategy in investment. So you can participate in many, many projects, and that spreads your risk, which is important. Then how do people get their money in? Well, we have for many years been a self-select platform. So we will list a project, and people will go onto our website and say, I like that project, I'm going to put some money into it. Okay. Then another one might come up. It might be an area they don't know or similar, and say, okay, I'm not going to back that one. Okay, so that was one customer characteristic. The other customer characteristic was to say, oh, these guys at CrowdProperty, they've got a perfect track record. They've seen £3 billion worth of projects, and they've lent about 80 million. They clearly work hard on curating the right ones and picking the best ones. And I will just put money in every single one. Okay. And that became a problem when deals were selling out so fast in a matter of seconds. Okay. So it's at that point we then developed the auto-invest algorithm that enables someone to preload a wallet and say, spread this across 10 to 20 projects. And that will just automatically allocate into however many projects. That means it's sort of, almost stress-free diversification. You don't need to go through the process that's a bit like buying Glastonbury tickets or something on the website. Because literally, when things started going in seconds, our phones would ring off the hook. Even my mother called in saying, "Oi, I didn't get into that one." So that was an element of pain. So we solved it. So we've got auto invest, and then there's the types of investing. So you can invest just like a standard account. So you've got an account. Everyone has wallets on the platform, and you're investing, and it's investment, and you get taxed on that on those returns.
What's the minimum that someone could invest? I mean, you talked about institutions, so that could be millions. But what about someone that's starting in CrowdProperty? There must be a minimum before it kind of becomes more of an administration nightmare.
Yes and no. I mean, our tech is awesome. So actually, we've just that cost to serve has just diminished. But and that was an important input into the auto invest algorithm, because for a self-select, if you're picking your projects, the minimum ticket size is £500.
Okay.
But that £500 is also the minimum ticket size for auto invest. So you can put £500 into auto invest and spread that in the minimum chunk in auto invest is £50. So you can spread your £500 into 10 different projects. So again, that lowers the barrier and ensures this principle of diversification.
Right. And typically, what's the rate? So we talk about how much you can put in. It sounds like people can readily access this particular fund through CrowdProperty. What typical rates is someone looking at? I mean, if you went to a bank account right now, let's highlight that. You'd be lucky to get 0.5% if you're with HSBC right now. If you go with the government bonds, you're looking at 0.01%. If you're looking at corporate bonds, again, 0.5% if you're lucky. How much can someone get reasonably within CrowdProperty?
So the rates on it's project dependent. It's between 7 and 8%.
Right.
There's a very important caveat here. We're an FCA authorized and regulated business, and this product is different to a savings account. Okay, your capital is at risk, and it is not FSCS protected. What we do is we work very hard to protect that capital. So, for example, we've cut down. We've funded only less than 3% of every project we've seen, and we always take the first charge security at modest loan to values, and we are funding projects that are putting product or end products, so homes, into good liquid markets serving undersupplied domestic demand at mainstream price points where there is an enduring market. So security and right exit. And those things are core to the model and a real core behind our exceptional track record. But the really cool thing is, and we were beneficiaries of George Osborne's changes around property during his tenure, which he's not the most popular man in the world around property. But what he also introduced was something called the Innovative Finance ISA. So we are an ISA manager. So you can have a CrowdProperty ISA. You can use your ISA allowance of up to £20,000 a year and transfer in other ISA pots from before. Maybe you've accrued an ISA pot before. And you can get those 7 to 8% returns tax free. Okay. Wow. Now that gets really interesting because other ISA options aren't often, again, different product, yes, savings accounts, this is capital at risk, but this is a step change in interest rate. If you're a higher rate taxpayer and you're getting 8% tax free, that's the equivalent of getting 13.3% outside of a tax wrapper that you have to pay tax on. And you won't get first charge security or anything like that.
No. And it's interesting how you worked out the tax for me. That's saved me a job no end. We are talking about the rates and the process. How long would typically, just coming back actually, you talked about spread of risk. The fact that you can spread your risk across a multiple number of projects is exactly what wealth managers, IFAs will be talking about anyway. Spread that risk as much as possible. If you've got an automated system, wow, that is great news. How long would someone time? Let's say someone put in £10,000 and they think, well, okay, I'm going to put in 10,000. The question will be, well, when do I get access to that money back? What's the typical timeframes?
Yeah, I'm just going to mention one point on that previous tax point, which is that we also have a lot of pension investment. So SAS pension and some SIP pension money as well. And there are various structural reasons why that's feasible to have it put towards residential property, because this is commercial lending. And that is very popular. SAS pension investments, especially popular, especially with the first charge security behind it. So in terms of time, when do I get my money back? It's a really important question because otherwise it's just paper returns. So our average project length is 14.1 months. Your investment is in for the duration of the project. Now, one thing to mention here is that, say, one thing is for certain, and this is an important expectation going in, is that you will probably, almost certainly, not be repaid on exactly the day that it says on the end of the contract notice. These are property projects, okay? And so, it will be around about then, okay? Our average payback is 6 days early than contract date. Sometimes it's earlier, sometimes it's later. If it goes beyond the contract rate or contract date, that's an inconvenience for you, and therefore you get an extra 2 percentage points on the interest rate for any time beyond that contract date. So you get fairly rewarded for that inconvenience. So it's project by project. You get your money back when the project pays back.
Great. Mike, to be fair, I think that's a good point to conclude the interview. I think it's great to hear about CrowdProperty, the availability of money, with the word I've picked up all the way through this process is the certainty you have, making sure you've got someone backing you. If you go to, and I'm not going to pick on different banks, but you don't get that support, which we've talked about as a property developer, as a property investor, is isolating, but having someone at your back like CrowdProperty, like Mike's team, that gives you great comfort for whenever you're doing property development, getting the money in position. And as someone who wants to invest money and unsure about which property to invest in, maybe CrowdProperty is right for you. And indeed, if you've got tax wrappers, how perfect can that be? Mike, just as a closing point, what are the kind of the type of projects that you're seeing as a trend? So I know people talked about converting commercial buildings to residential, building flats, building eco-living and icon living. What kind of projects do you think is going to be quite popular moving forwards?
Yeah, I'm just going to pick up on one point, if you don't mind. So you're exactly right. We are property financed by property people. And that is just game changing. It's never existed before. Okay. And the reason why that's important is because you're speaking with an expert. If you're a borrower, you're working in partnership. Okay. If you're an investor, you know that the people in CrowdProperty know the asset class intimately, having been in it for decades themselves. Yeah. And that's crucial. In terms of projects we're seeing at the moment, everything from HMOs through to big new builds. We really like the big macro trend in property investing at the moment is you cannot rely on capital growth to scale your portfolio anymore. Okay, yes you can, but it's much slower. Okay. So what we see is property investors buying something, adding value, and then refinancing and keeping that, okay, bringing some capital out and then churning it that way, but building a portfolio, okay? So that's the blend between the traditional investor, the traditional developer. It's about people thinking through, how do I build a portfolio? And that's great. We really like that, because if you are going to end up owning and keeping what you build, guess what? You build it well. So that's probably one of the biggest trends over a number of years that we've seen. And we think that's a very, very good strategy.
Mike, thank you ever so much for your time. Anyone listening to this, I will put links in for CrowdProperty in the description box below this video, so you can talk to the guys, find out what's good for you as a property developer, and if you want to invest your money in a relatively safe-ish environment, because you could spread your risk, but giving great returns at the same time. So, Mike, thank you ever so much for your time today.
Pleasure. Thank you, Simon.